Have you ever wondered why Bitcoin is trading around the $100,000 level, yet market sentiment feels like a failure? If you open social media today, you'll see countless people saying, Bitcoin is no longer exciting. The price has gone sideways for too long. Maybe the cycle is already over. And at this exact moment, I want to say one thing clearly. This may be the most misunderstood phase in Bitcoin's entire history. Most investors, especially in the United States, are still looking at Bitcoin through an old lens. They are used to price needing to surge aggressively, to constantly make new highs, to deliver excitement. And when that doesn't happen, they conclude that Bitcoin is dead. But financial markets do not operate on emotion. They operate on structure. The reality is this: Bitcoin has not entered a bull run yet. And that is not a negative sign. On the contrary, this is the base building phase, a phase that every major growth cycle in history must go through. Those who only look at price see stagnation. Those who understand market structure see preparation. And the biggest problem I see today is this: too many people are still trying to force Bitcoin into the old 4-year cycle. They believe that at a certain time, Bitcoin must peak, then crash, then repeat. But according to George Bodine, and based on my own experience working for years with institutional investors in the United States, that cycle is dead. Bitcoin is no longer a seasonal speculative asset. Bitcoin is gradually becoming a global financial system. Today's price consolidation is not weakness. It is a sign of market maturity. We now have ETFs, derivatives, institutional capital, and deep liquidity. This allows those without conviction to exit, while long-term thinkers quietly accumulate. This is the process of coins moving from weak hands to strong hands. And history shows that once this process is complete, the market never looks back. While Western media continues to debate, in the Middle East, in sovereign wealth funds, and inside closed-door meetings of major financial institutions, Bitcoin is being viewed very differently. It is no coincidence that Michael Saylor is appearing in Dubai. That is not tourism. That is a signal that a new financial order is taking shape. And if you still think all of this is exaggerated, remember one thing: generational wealth opportunities never look obvious while they are happening. In this video, we will explore why Bitcoin is being misunderstood, why the real bull run is still ahead, and why many people, perhaps the entire market, will regret the decisions they are making at this very moment. When you start viewing Bitcoin as a system rather than just a price, many things begin to make sense. The truth is, the current market is not weak at all. On the contrary, it is stronger than ever. We are talking about a market that is now large enough to absorb hundreds of billions of dollars without the wild volatility we saw in the past. ETFs are live. Derivatives are fully developed. Institutional capital is here. Liquidity is deep enough to allow long-term holders and large institutions to exit positions without collapsing the market. And that is precisely why so many people are getting it wrong. They look at the chart and say, Bitcoin doesn't move like it used to. What they fail to understand is this: a mature market no longer behaves like an immature one. Sideways price action is not a sign of failure. Sideways price action is a sign of redistribution. This is when conviction fades and weak hands sell. This is when those without belief leave the market. And on the other side, long-term investors, institutions, and even nations are quietly accumulating, without media attention. Financial history repeats itself in a brutal way. Backhand index pointing right, the majority exits right before the real growth phase begins. One of the biggest reasons for this mistake is blind faith in the 4-year cycle. That model worked when Bitcoin was small, liquidity was thin, and the market was easily manipulated. But today, Bitcoin has moved beyond that phase. According to George Bodine, and based on my own observations working with financial institutions in the United States, the 4-year cycle is no longer a reliable compass. Bitcoin is entering a new era, operating as a global asset class, tightly connected to capital flows, policy decisions, and the structure of the global financial system. That is why those trying to time the cycle top are quietly removing themselves from the game. Meanwhile, beneath the surface, adoption is accelerating far faster than the media suggests. In the Middle East, among sovereign wealth funds and major financial institutions, the debate is no longer whether Bitcoin will survive. They are discussing how to integrate Bitcoin into their systems. It is no coincidence that Michael Saylor is showing up in Dubai. That is where capital clearly understands one thing. In a world defined by debt, instability, and declining trust, absolute scarcity becomes the center of the next financial system. And when it comes to price, we need to be brutally honest. The $250,000 to $400,000 range in the 2025 to 2026 timeframe is not a sensational prediction. It is a base case scenario, grounded in mathematics, supply-demand dynamics, power law models, and emerging institutional flows. Looking further out, $1 million per Bitcoin is no longer a question of if, but when. Ironically, when that happens, most people will say, the price moved too fast. What they forget is that they chose to sit out the accumulation phase when the market gave them time. 2026 may be the year the debate ends. A single symbolic move, such as the U.S. government officially purchasing Bitcoin, would be enough to permanently change how the world views this asset. It wouldn't require a large purchase. Just one Satoshi. At the same time, MicroStrategy may no longer be just a company holding Bitcoin. With hundreds of thousands of BTC, it has the potential to evolve into a new kind of financial institution, offering credit, lending, and financial products built directly on top of Bitcoin. This is no longer a speculative story. This is the financialization of Bitcoin. Bitcoin is becoming the foundation layer, while the rest of the market, from tokenized assets to Web3 products, continues to struggle with one unsolvable problem: trust in intermediaries. Bitcoin does not require that trust. And that is precisely why it cannot be replaced. And it is precisely at this point of convergence that we begin to see a clear shift in how Bitcoin is being used and valued. Bitcoin is no longer held simply to wait for the price to go up. It is gradually becoming collateral, a liquidity layer, and the foundation for new financial products. This is something most retail investors have not fully realized yet, because they are still viewing Bitcoin through the lens of 2017 or 2021. But institutional markets are not. In traditional finance, once an asset reaches sufficient scale, stability, and credibility, the next phase is not speculation, it is financialization. We have seen this with government bonds, real estate, and gold. And now, Bitcoin is entering that exact phase. In 2026, the dominant Bitcoin narrative will no longer be who is buying more BTC, but who is building the most efficient financial products on top of Bitcoin. Lending, credit, derivatives, structured products, all of them will revolve around a common core. An asset that is trustless, provides final settlement, and can move globally at near zero cost. This is precisely why MicroStrategy is mentioned so often in discussions about the future. With hundreds of thousands of Bitcoin on its balance sheet, it doesn't just own an asset, it owns structural leverage. It can lend, issue credit products, and generate yield without selling Bitcoin. If you look far enough ahead, you'll recognize the pattern of the earliest banks in history repeating itself. Except this time, the foundation is not gold or political power, but Bitcoin. Alongside this process, the world will continue to talk extensively about asset tokenization. Tokenized gold. Tokenized real estate. Tokenized equities. Tokenized everything that can be priced. On the surface, this sounds reasonable. Increased liquidity, broader access, 24/7 trading. But at a deeper level, the core issue remains unchanged. Trust. You must trust that the asset actually exists. You must trust that the issuer is not committing fraud. You must trust that the rules of the system will not change. And this is where Bitcoin separates itself from everything else. Bitcoin does not require trust in anyone. When you self-custody, the asset is truly yours. No counterparty. No intermediary risk. It cannot be frozen or confiscated if you control the private keys. In an increasingly digital world, where everything becomes more virtual, Bitcoin preserves true ownership. This is also why comparisons between Bitcoin and gold are becoming increasingly strained. Gold has historical value, but it cannot move at the speed of light. It cannot settle instantly. And when you attempt to digitize gold, you strip away the very property that once made it trustworthy, its physicality. Bitcoin is the opposite. It was born for the digital world, and therefore operates flawlessly within it. And when you put all of these pieces together, market maturity, the end of the old cycle, global adoption, financialization, and absolute structural differentiation, you begin to understand why numbers like $250,000, $400,000, or even $1 million no longer sound unrealistic. They do not represent hype. They represent the market finally pricing Bitcoin correctly. The only question left is not where Bitcoin is going. It is, where will you be when it gets there? And when you step back and look at the entire picture, one truth becomes very hard to deny. Bitcoin does not need majority consensus to survive. It only needs time. Every major cycle in financial history has included a phase where the asset was doubted, dismissed, and declared dead. That is always the moment when most people leave the game. And also the moment when the foundation for the next phase is quietly being built. Bitcoin is in that moment right now. Sideways price action is not the end. It is the silence before a major shift. A period where the old system has not fully collapsed, but the new system is already forming beneath the surface. And once that transition becomes obvious, the market will not give you time to reconsider. Those who sell today are not wrong because they sell. They are wrong because they do not understand what they are selling. Bitcoin is not just an asset to trade. It is trustless ownership. It is final settlement. It is a financial system that cannot be controlled by any intermediary. And for that reason, it will continue to attract capital, confidence, and power in a world that is becoming increasingly unstable. When people look back a few years from now, many will say, "I wish I had understood this earlier. I wish I hadn't let emotions drive my decisions. I wish I had been more patient." But markets do not reward regret. They reward those who understand structure and maintain long-term conviction. And the final question I want to leave you with is not, how high will Bitcoin go? It is, which side of history are you on? If this video helped you see Bitcoin more clearly, hit like so the algorithm can share this perspective with more people. If you want to continue understanding Bitcoin not through short-term price action, but through structure, capital flows, and long-term strategy, subscribe to the channel and turn on notifications. And I genuinely want to hear your perspective. Are you holding Bitcoin because of long-term conviction, or simply out of fear of missing out? Leave a comment below. Let's discuss. See you in the next video.